Hello and welcome to the trade setup. In this video, we are looking at the Hang Seng Index. This was a stock analysis request from one of the followers, and I wanted to let you know that anyone can make these requests, and I'll most likely cover them, especially if there is an actionable trade setup to follow. And in the case of this chart, we are dealing with a decent structure. We have an initial 5-wave move to the upside that I would be tracking as part of a leading diagonal, but nonetheless, we can track this as a wave 1, and we would have here a wave 2 correction that we could look forward for. And then we would expect to have reached the area of support within this correction, and so we have. We got to the 38.2% retracement. The first level, we have done so within a 3-wave pattern, and honestly, we have fulfilled the minimum expectations for such a pattern, for such a correction. Now, does this mean that we are in a 3rd wave to the upside? And I would say that it does possibly imply this, but we would need to be aware that even though we have started with a wonderful initial push to the upside, we had this 5-wave structure, just beautiful and perfect. We have formed a 3-wave correction into the area of support and we extended higher, but we have done so within a diagonal structure. Now, normally this wouldn't be a problem, and I would even still look for continuation higher within another 1-2 setup in such a case. We did this, and we extended even higher, but it seems we might have even formed a distortion in this area because we seem to only have a 3-wave pattern. Now, I could track this as something like a WXY structure, but this would be rather expected to be within a wave B, not within a larger uptrend to form. So what are our options really? So we actually have quite a few. So I could still track this to be the bottom of the wave 2 and to look for an uptrend for this area. I could be looking for something like, who knows, maybe even a 1-2 setup where we would have a flat correction. Not really a problem, a WXY in this area, something we could track. I wouldn't necessarily exclude it. I could also consider that this would be part of a running flat, and we would track our uptrend for the wave 3 to have begun here instead, and even this would be able to be tracked as a WXY structure because within this movement to the downside we don't have a clear 5-wave pattern. Even this, we have so many options on this chart. It is so flexible, it is kind of annoying actually. And even here I could consider this to be a truncation. I could consider this to actually be a wave C, but I wouldn't honestly look too much into it. And the only thing I do want you to consider is that we could be forming a more significant correction in a sideways pattern within this area. So, you remember how we mentioned we would have an initial wave 1 to the upside. We would expect a wave 2, we would expect a 3-wave pattern, a 3-wave correction. The wave 2 is always a 3-wave correction. But what if this wasn't a wave 1? We might have had an initial wave A to the upside. Well, we would need to consider a wave B. A wave B is also a 3-wave correction, right? Well, most of the time, yes, but a wave B can also unfold as a triangle. So you see, in such a case, I would be very, very careful to not form something like an A, B, C, D, E. That would imply we would expect continued sideways correction within this structure, within this area, for a little bit longer, as this idea of a wave B pattern would not be complete. I won't necessarily focus on this too much for now. I will be focusing on the idea of a bottom being in place here within the wave 2, and I will be looking for continuation higher, especially since within this retracement we have formed an interesting pattern, something that could actually be more promising than what we have had so far, but I would still need to see a stronger signal by breaking the relevant levels of resistance for such an idea. So normally within a triangle we would expect to have our reaction and reversal at the 61.8% retracement. We did get quite a significant one here, we did push in to the 61.8% retracement and massive drop, what is it, like 20% in a couple of weeks, quite substantial. Now, even though within this pattern I could be tracking an impulse, it has entered the unrealistic expectation territory, because here we could track an initial 1-2 setup, and I could have a couple of 1-2, 1-2 setups within this area, but to be honest, I would need to track this entire movement to the upside as just a series of 1-2 setups for this to actually work out as an impulse. I would be much rather prepared to form a diagonal pattern instead, where I could honestly consider this to be something like an A, B, C movement. In such a scenario, I would be prepared to have a more significant top in place. Now, is this necessary? Well, no, and I might actually even prefer that we form another high within this area, even quite a substantial one, but for that I would also like to see a larger correction initially. So you see, within this wave C, I would be looking at this as a wave 1 up, a wave 2 down, a third wave up, fourth wave down, and then a fifth wave. Quite a flawless diagonal structure if you ask me. Only thing I could consider to be better would have been a more clearly defined three-wave structure within this fifth wave, yeah? A larger wave B correction between the wave A and the wave C. So far, we do have a three-wave pattern we could track within this area, but we only had a shallow correction here. This structure was already quite substantial, and we already seem to be moving to higher prices. Now, I mentioned this is quite a perfect diagonal structure. We have retraced very nicely here within our wave 4 into the 61.8% retracement, which is the last level of support. We have overlap with the wave 1. This is the reason. In classic Elliott Wave rules, we actually cannot even have a diagonal structure without having overlap. Now, in this fifth wave, I would still be looking for a possible continuation higher, especially since we see this intention to push so, but I would be extremely cautious because I do have a full count. We might form another high, we might form a tiny 5-wave move to the upside within this area, but remember, even if we briefly break the area of resistance, without forming a sustained break would not be sufficient to consider this probability of a more significant bottom to be in place to shift, yeah? And at the moment, I still remain of the opinion that ideally within this fifth wave we would form a larger ABC pattern. I will be looking for support for continuation higher at the levels between the 24K level all the way down to the 20.8K level. But be aware, this would be an extremely high risk area as we do already have available a full count within this structure. Now, if you want to consider a long side position, you could be looking for a potential 1-2-1-2 setup as well. We would be able to look for position within this larger time frame area of support that starts at 21.6K and goes all the way down to the 16.9K level. But to be honest, we don't really have a clear pattern that I would personally recommend as a high probability trade setup on this chart. I would generally be rather careful, and even though within an index the risk is reduced thanks to diversification, I would personally prefer a high probability structure within a singular stock. I would find it a more likely winner, and I am personally rather skeptical of this chart. And for now, we can look here even in the smaller time frame, but there isn't much useful data, within such a small time frame. I could maybe consider this to be something like, once again, a series of 1-2 setups. But how realistic is it to form a third wave to the upside within this area? Well, I'm personally not a big fan of the probabilities, but ultimately it is for you to decide if you look at this structure with interest for the long potential. I see it as we are within deep resistance and that we should be prepared for a more significant top to be in place. And also, one thing to keep in mind is the divergences we see here, even on the weekly time frame. We can look on monthly, it's not so significant, but I would still be careful. And for now, these are the levels, this is the trade setup. I hope you enjoyed the video, and if you did, don't forget to subscribe and let me know what else you want me to cover, and I'll do my best to do that in the days, weeks ahead. And until then, I hope you have a nice day, and I hope to see you in the next video. Bye bye.